Hi there, this is Professor Ford. I've had a question about the financial calculator. Now, here's the thing. During in the book, you see a problem like this. I mean, it takes you through. It gives you instructions for a Texas Instruments Business Analyst 2 calculator, and if you want, you can download an app for that, the Business Analyst 2 app. I think it's $5 or $10. I've got it on my phone, or you can get an actual calculator. It's about $30, but you don't need that either one for this class. It takes you through a little example here. It also tells you how to do it with an Excel spreadsheet. That's all fine and dandy if you want to do that. Now, I recommend doing it here in Blackboard. If you go to the module here, time value of money, in Blackboard, you will see an online calculator right there. And I'll show you how to use it. But first, I really highly recommend here, well, here, right here you'll see lectures, and I just usually just assume you're watching that, but let's see. That one, okay, I have a little blurb on the time value of money there to watch. But here in particular, I'm looking at, whoops, I hit the wrong button. Uh, Here in the lectures, video audio lectures. Okay, go there. And I've recorded a thing on the time value of money using a financial calculator, timelines, a very good tool, annuities. I think I've had students tell me in the past that that's a lot more useful. So, and I think it is too. So please watch that, especially if you're having trouble with that. Okay. Here again, I go through using a financial calculator. Now, I'm going to go through one of the examples I use in there in that little video. It's only like 6 minutes long, but I'm going to go through that using the online calculator I provide you. Now, I make a point here. If you Google financial calculators, you'll see a lot of online calculators. But anyway, here's one that works just fine. Okay, so most of the problems with these financial calculators revolve around cash flow direction. So I'm going to do a little problem using the same numbers I do in the video that I recorded. Um, okay, let's suppose that you invest $1,000 today at 5% interest for 10 years. How much will you have? Okay, now using this calculator, I'm going to put in present value because that happens today in the present. And I've got to put that down as a negative $1,000. That's where most of the errors take place. If I'm going to invest 1,000, I've got to give up 1,000. That money is going away from me. So we have to tell it which way the cash flow is going. It's going away from me if I invest it. I'm giving it up. So that's a negative. And at 5% interest, no payment. We're not using that key. That's an annuity. I also talk about annuities in there. So we don't do anything with that in this problem. Number of periods. Well, I said for 10 years, 10 periods, and the periods are annual. Now you might come up on others where that's monthly or whatever, semi-annual, whatever, but so you need to adjust that. So that's the number of periods, and this defines what the periods are. So for 10 years. Okay, and we want to solve for future value. Okay, we don't enter anything in there because that's where the answer is going to come up. So on this particular calculator, I just click on future value. Boom, there's my answer. So if I invest 1,000, notice that's a positive. That's coming back towards me. So I give up $1,000, negative 1,000, 5% for 10 periods, and the periods are years. I click on future value, and that gives me the answer there. So Let's do another one. Let's say I invested. Well, here, let me clear it out. Let's just start over with a new. But I think you'll get the hang of this. It's easier than the spreadsheet, and it's easier than the financial calculator they give you. The TI Business Analyst 2 is not one of the more intuitive calculators. It's powerful, but it's kind of difficult to learn how to use. Now, notice that there are instructions in here too. You can look up and it'll explain what each field is. But let's say you invest $5,000. Negative. I'm giving up 5,000, and I get 10,000 back. Okay, in the future. So let's say that's in 5 years. So if I invest 5,000 today and get back $10,000 in the future, five years from now, what rate of return did I get? What compounded rate of return did I get? Okay. Well, let's click on rate. That's a 14.87% annual return. Pretty good. Doubling your money in 5 years, that's a 14.87% return. Now, if I had, here's where the mistake comes in, enter that as a positive, you can't have a positive cash flow today and in the future. Can't do that. Okay? That does not compute for these calculators. They don't know what's going on. So I click on rate. Nominal rate cannot be computed. Okay? It just doesn't make sense to it. Hope that's on your screen. Anyway, I'll do that here. Rate. Well, there we go. Okay, I think that clears up most of the issues with the financial calculator and calculating these time value money problems. So again, first go into these lectures, these video lectures in Blackboard. I think we'll present it in a little different way. Where it is, I think, a little more understandable, and that's just my what I think. Maybe not. Maybe the book explains it better for you, but at least you've got another avenue to look at this thing from. Okay,